Now, to date, my stock market portfolio is down at 23%, which is something that, of course, it is making me to continue wanting to load the boat on some of the stocks that I personally like and follow, or the ETFs that I really like the VOO, which is the Vanguard S&P 500, which tracks the top 500 companies in the US. I mean, year to date, the S&P 500 is down 22%, or around 22%, which is something that, of course, it is making most of the retail investors to panic, and some are just had enough about this stock market crash. They want to see the market recovery, which is even leading to some maybe selling their stocks, selling their ETFs at a loss, because they are just not sure if whether the stock market will recover. But ladies and gents, today I bring you good news to say that, guys, hang in there. The stock market will recover. This is not the very first time we are seeing a stock market crash, but we have seen this happening a couple of times, and this is the time that instead of you panicking and probably selling some of their stocks at a loss, this is a time to accumulate. This is a time to make sure that you are going in the market, put in money in your top favorite stocks, top favorite ETFs, trying to lower your average purchase share price down. Yes, we don't know how bad this, of course, the stock market will fall, as already there are speculations that the US could be going to a recession, or the US economy might enter a recession very soon, which is one of the things that, of course, it is making investors or retail investors to panic more. And again, I will emphasize the point that I don't know how bad, or most analysts, they don't know how bad the stock market will fall. But one thing for sure is that as it continues dropping, make sure that you do your dollar cost averaging and you go in the markets and load the boat, because we don't know how bad or how sharply will this thing drop. But one thing for sure is that, of course, this thing of high inflation, a recession, which some of the analysts are predicting that we might get to see, it is something that is not the very first time we are seeing, and it has happened before, and we've been seeing the markets recovering afterwards. In fact, on today's video, I just want to take you through some of the history or some of the crashes that we have witnessed since 1973 to date, and how were the recoveries after those market crash, and how long it took for the market to recover after the markets have crashed. So if you enjoy the content that I'll be giving you, please consider hitting the likes button, comment and subscribe, so that at least you don't miss the good content that, of course, we produce on this channel. I mean, back in 1973, we saw the stock market starting to fall, or we started witnessing a crash back in 1973 in January, which of course lasted, or that crash lasted for about 21 months, which again later took 69 months for the markets to recover from that crash. But one thing for sure is that regardless of the time period or the length, which is 69 months, which took the market to recover from that 48% drop, it ended up recovering quite well. And those, of course, that were adding or loading the boat, then of course made some good returns, as of course the market recovered, or it took the market to recover or to regain that 48% 69 months. Now again, in November of 1980, we saw the stock market crashing 27%, which of course it happened around 20 months, or it took 20 months for the stock market to crash that low. And of course, as seen on the screen, notice that the recovery for that crash, it was 3 months. So the recovery, there is a very high possibility that you see the recovery in a short term or in a short period, which is always good to watch. And of course, in that case, in the crash which happened in 1980, we saw the markets recovering just after 3 months, or in 3 months, on the crash that of course took about 20 months. Now the next crash took place around 1987, or in August, or from August 1987, and the market crashed about 34%, and of course that market crashed to 34%, or dropped by 34% in just a period of 3 months. And of course, that, ladies and gents, when looking at the recovery, it took the markets 20 months to recover from that 34% drop, which they had witnessed in August of 1987. Now the next one came in July of 1990, which of course crashed by around 20%. And of course that crash happened, or it took like 3 months for that crash to happen, and we saw the recovery taking place, or the markets recovering in 4 months after that crash, which is something that of course it was quite a speedy recovery from the market. And then the next one came in March of the year 2000, which crashed by around 49%. And of course the crash lasted for about 31 months, and it took the markets 56 months to recover from that crash. Now for this one, you can see that of course the crash took much longer, and the recovery also took a bit longer for the market to recover. But one thing for sure is that the market ended up recovering. Then the next one happened in October of 2007, which of course lasted for about 17 months, and it took around 49 months for the markets to recover again. And the next one, of course, is the one that most of the people that are right now investing in the stock market started investing after this market crash. And that that is the COVID market crash, which took place in February of 2022, where we saw the stock market, or the S&P 500, dropping for about 34%, which of course happened in 1 month. And guess how long we got to see the market recovering? It recovered in just 5 months, which is one of the things that of course made so many people to be really excited about the bull run that we saw from that crash that happened in February of 2020. And like I said in the beginning of this video, year to date, the stock market, or the S&P 500, is down 22% year to date, which is one of the things that is making, like I said, the retail investors, or the investors, to really wonder as to how low will this crash go, and how long will it take for the stock market, or for the S&P 500, to recover towards its all-time high, which is one of the things that, like I said in the beginning of this video, nobody actually really knows how long the crash will last and how long it will take for the markets to recover. But one thing for sure that I can tell you about the current crash that we are in is that inflation is still very high, and of course there is a possibility of a recession taking place, and of which those two, ladies and gents, as long as they are still amongst our midst, we can expect the markets to fall down further. I personally believe that the stock market is going to continue dropping further, which, ladies and gents, just has to make you to continue loading the boat in some of the stocks, some of the ETFs you love, because one thing for sure, like I said in the beginning of this video, the stock market will recover, and these low trading prices that we are seeing in some of the stocks ought to make you to go in the markets, do dollar cost averaging, because nobody knows as to how low this market will drop. But one thing for sure, I personally think that the fact that inflation is still very high, we are still going to continue seeing the stock market dropping sharply. And of course, with the possibility of a recession taking place in the US, well, that in itself, of course, is going to make the market, of course, to continue falling or dropping sharply. But there are analysts who believe that, of course, those things, recession and of course a rapid increase in interest rates, have been factored in the markets. And I mean, I think it was Morgan Stanley and Goldman Sachs believes that the markets, we might see the S&P 500 dropping to around $3,400, which is one of the things that, of course, getting to know that, of course, it has been dropping non-stop. There is a very high possibility that we get it dropping to those levels. There are some people that are even predicting that it might even drop further, which is something that we are yet to see. But one thing for sure, like I said, it's an opportunity for you to probably go in and do your dollar cost averaging, load the boat on your top favorite stocks, load the boat on the S&P 500, which is one of the indexes that throughout history it has been quite consistent in terms of the returns that it gives to the investors. Otherwise, with all that, guys, I just thought I should just give you this quick update. And if you did enjoy this video, please consider hitting the subscribe button and hit that notification bell so that you get notified every time we drop a content like this. Otherwise, that's all from me, and I wish you nothing but the best in your stock market investing journey, and God bless you all.